Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is April the 29th, and we have Brent crude oil trading this morning down about 1% at $65.25. I'm not sure the story today is about oil, given the dramatic events in Europe yesterday, in Spain, Portugal, which saw all of its electricity outage, essentially a countries wide, a European blackout. Let's kick off this morning trying to get some sense of that from Anne-Sophie Corbeau, a global research scholar at the Center on Global Energy Policy, Columbia University, based in France. And Sophie, what do we know from this event? What can we extrapolate from it now, only sort of day after, the morning after the night before? There was a lot of sort of off the cuff reporting. Oh, the Spanish grid was too dependent on renewables. There was the idea that the Spanish grid is an island. It doesn't have the backup of the rest of Europe. What do we know the morning after the night before of this calamitous event in Spain and Portugal?
Very good morning, and I was checking, what the transport system operator was saying just before this call, and it seems that the situation is almost back to normal now. But indeed, at about lunchtime yesterday, there was indeed a dramatic collapse, and we had a gigantic blackout in the Iberian Peninsula. I don't think we have found out, it's still very early morning here, we have found out the real reasons why this happened. I am sure that everybody is blaming pretty much every single source of energy depending on what they believe in right now. So I would basically ask everybody to basically wait for the TSOs both in Portugal and in Spain to find out what the consequences and the reasons of for this blackout are. But it's very interesting that this event is happening a few days after the big summit that the International Energy Agency organized last week on energy security, but because it reminds us that in a world which is increasingly electrified, electric security is as important as oil security, in the 73, and gas security, as we have found out recently with the crisis in Ukraine and then the crisis in Ukraine also in 2009.
There is just a follow up on that. This idea of Spain as an energy island. Now, of course, Spain has for some time tried to get France to accept a connectivity with the LNG coming into Spain, pipelined up to France and the rest of Europe. If I understand that correctly, Macron and France has always resisted that. What am I getting that right? What does that tell us about anything, if it's at all relevant?
Um, so here we are talking about electricity. There are some electricity interconnections between Spain and France. Now we can indeed wonder whether this is enough, but what you're talking about is a pipeline connection. And it's very interesting
Well, we're
because I
talking
think in
about
the
connections,
2000,
whatever they are,
yeah, but
connections, whether
in
it's
the
a
2000,
road, a
I was
tunnel.
I was already in the 2000s, so probably almost 20 years ago now, hearing about that pipeline project, which was called MidGas. And then there was a lot of, call for interest. And in the end, the market decided, well, not that much of interest in the end. And the project came back again because of the crisis in Ukraine, and in particular, Germany thinking, oh, wow, there is, all this unused LNG import capacity in Spain because Spain had overbuilt in terms of LNG import capacity, and we don't have enough. So let's just build a pipeline for France. And France was like, yes, thank you. So I think, the point is that it's not only Macron, it's, the market had decided before that, there was not that much of interest. And while building, a pipeline to bring the LNG, which is arriving to Spain, back to Germany, while, there are also some LNG import terminals in the south of France.
Let's go across to the other side of the world. Mark Howson, head of Asia at Welligence Analytics, and stick with the gas theme. We have further reports, the sort of face-off, the trade war between China and the United States is ongoing, and sort of one of the main pieces of that is China's now 2 months hasn't imported any LNG from the US. What's your sort of update on that, Mark, and the outlook for it going forward? It doesn't seem to be disrupting the global supplies as of yet. Your thoughts on this and where it goes next?
Mm. Yes, Sean, happy to obviously touch on that. I also just want to add a little bit onto the discussion around Europe, because
Please.
on the back of those power outages yesterday, literally in the last few hours, Woodside Energy has taken FID on a US big LNG project, a 16.5 million ton US LNG project. Now, of course, at the moment, around 80% of all US LNG does flow into Europe. So to build on Anne-Sophie's point about energy security, that increasing flow of US LNG that we've obviously seen since the Russia-Ukraine war, and has kept a lid on European gas prices, that is very much expected to increase with these additional FIDs. And quite frankly, we've seen a real spike in US LNG deal announcements, both contracted volumes as well as companies buying stakes in the liquefaction projects. And again, the majority of that US LNG is expected to flow into Europe. So,
and would you see any of those developments, Mark, as part of this sort of Trump face-off, this Trump tariff war? Because so many countries are saying, "Oh, what we can do is buy more of your gas if that'll make you happy."
Correct.
But I mean, FID on projects this size can't be decided on sort of fickle things like that.
Well, to be honest, it's a kind of slew of measures the administration has introduced. Obviously, last year we had a pause on non-free trade agreement export approvals, and obviously that was lifted by the Trump administration. And in addition to that, he's streamlined the approvals process, and he's also granted conditional export approval for 4 pre-FID US LNG projects. And in addition to that, like you say, there's the pressure from the tariff, which is encouraging particularly Asian buyers to invest more in the United States. Now, a lot of that is focused on US LNG projects on the Gulf Coast, but the big wild card is Alaska LNG, because obviously that doesn't face the same shipping bottlenecks as the Gulf Coast cargoes. And there are tens of TCF on the North Slope that have been proposed to supply an LNG plant for decades, and that's never happened. But that is now in the minds of Asian buyers we speak to.
Let's come back to the Asian buyer part on LNG. Andrew Lavin, a managing director at Econs. Let's get crude oil, the good black stuff, back on the table here. Brent crude oil down this morning, but ultimately caught in a tight band. Andy, what's your sense of where this oil market is at now, 1 month into the suspension of the Trump tariffs that were lasted for 5 minutes and shocked the world? Where is this market at? What's its North Star, do you think? Whoops, silence. Is that what it is? Silence is, yeah, that's probably the appropriate North. The oil markets are without noise. Yeah, go ahead. Sorry.
So there is no North Star. It is totally overcast, and you can't see a single star in the sky. And I think that's really why it's kind of tightly bound, because unless there is a very clear signal from the market, it's not going anywhere, right? I'm kind of, some of the words you've got on your daily report is like jitters, concerns. There's a lot of concern. And people don't really know whether that's a positive concern or a negative concern. There's lots of things you could point to that are negative, but equally, there's lots of experience we've had over the last few months where those concerns turn out to be meaningless because, for example, Trump, as you kind of said, walks back his tariffs. So actually, why did the shares go down as much as they were? Well, because we believed what he said. So I think people are really just kind of going, I have no idea what's going on, therefore I'm actually not going to do anything.
And traders wouldn't see this volatility as opportunity to make money. Typically, they love a bit of volatility.
So I think it changes the dynamic. So as you were talking to the other 2 guests, the 3 words that came into my mind were security, diversity, and economics, right? So you asked the question about whether China had stopped buying the US and would that make a difference? Well, it doesn't make a difference to the amount of gas that's available. You just buy the next best, cheapest product you can get, right? So if you go to Marks and Spencer's and they've got no milk, then you go somewhere else. If they haven't got any milk, you go somewhere else, and the prices are slightly different, but they're all competing. So realistically, as soon as you put tariffs on something that is a commodity, we just go and buy the other commodity from somebody else. It's only if you're the only person it makes a difference. And I think the other thing that it has created, which is where the kind of the traders come in, is we had allowed ourselves to be comfortable in a world of globalization where it was okay that we buy from this country because they're the cheapest, and that's it. And what we've woken up to, very rudely woken up to, is, oh, but if they don't supply me, now what do I do? So we now start worrying about diversification. But diversification costs money, right? The whole conversation about LNG into Spain and a pipeline, well, hang on a minute, building an electrical line is much cheaper than building a pipeline. So move electricity, not gas. It's cheaper. But the problem is you then rely on a electrical pipeline, right? And if that goes down, oops. So it's all about diversification. But then it comes back to, if I want to diversify, I have to spend more money. And is that what I want to be doing in terms of the current global environment? Probably not. So that's where the traders are very, very effective in balancing the supply demand and finding alternative supplies at competitive prices.
Anne-Sophie, as we say, it's the morning after the night before, and I wanted to sort of look at what could there be a sabotage in this equation? Could there be cyber attack? We've seen in recent years Europe's energy disruption come from a war in Russia, Ukraine, the detonation of the Nord Stream pipeline connecting Russia to Germany. There is multiple examples and records every day, apparently, and some more scale than others, of digital sabotage moving across Europe from Russia and other malevolent actors. What could be the outcome here? What are the context here that one might consider that? Is Spain, Portugal particularly vulnerable? Is it, do you see any sort of context here where there could be a sabotage actor?
Again, I mean, this is probably too early to say anything, but definitely cyber risks are increasingly something that all the companies are concerned about, I mean, and this is not only about electricity, this is about pipeline, this is about anything. So I think, again, I mean, we are 1 week after the big IEA summit, and I'm sure they discuss also the cyber risk. But I also wanted to come back to what Mark was saying about, these flows of US LNG, which is coming to Europe. And sure, I mean, Europe is buying more and more US LNG, first because, we have lower storage compared to last year. We have also lost 15 billion cubic meters of Russian gas, which was previously transited through Ukraine. So we need to import LNG. And the main source of additional LNG this year is going to be the United States. So already in Q1, we have seen Europe importing about 20% more US LNG, and this is perfectly normal. And we have seen also a few additional deals which have been signed between European companies and also American companies. But is that enough for Mr. Trump? Because I have been arguing again and again over the past few weeks that all this LNG is never going to be enough to plug the trade deficit between the US and Europe. So there was this number which was floating around about $350 billion of euros, which is about, the total value of oil and gas imports of Europe. So if you want to basically replace that, we need to import that value uniquely from the United States. That makes no sense. If Europe wants to uniquely bridge the gap between Europe and the US in terms of trade deficit with US LNG, we need to import 20 times more. Again, that makes no sense because already half of our LNG last year was coming from the United States. So sometimes, you need to put numbers in context to understand, is that going to work, or
But
is it
if we
just, putting
if we
pressure?
Mark, coming back to the earlier point of LNG into China from the US, never a massive part of the equation, but inevitably an important percentage of the Chinese requirement, not irreplaceable. But this shift doesn't seem to have disrupted the global dynamic. The JKM price point is fairly stable. It's down at around $11, near where it was a year ago after going up to 15 over the winter. How do you see this playing out and impacting the global LNG market, which of course is a global market at this stage?
Yes, you're quite right, Sean, in the sense that obviously China was the world's largest LNG importer last year, and it has been since 2021. But Chinese LNG demand this year is actually particularly weak, basically due to their higher domestic gas production, higher imports of Russian piped, and also just weaker demand due to mild temperatures there at the moment. And exacerbating that is the factor you said before, since February, China hasn't imported a US LNG cargo, which is actually the largest length of time for 5 years. As you allude to, the US supplied 4 million tons per annum of LNG to China last year. It was, I think, the fourth or the fifth biggest supplier. So that weakened Chinese demand has meant that those Chinese cargoes have more either been resold, and that obviously helps the energy security of supply in Europe, where LNG demand's actually strong this year. So at the moment, the trade dislocation hasn't affected prices that much, but it has affected flows of LNG kind of away from China into other markets.
Andy, looking at China, just to Andy, on the China side, where the idea that reports indicating China's inventories, oil inventories, have built up quite significantly in recent months. That China, despite all of the sort of negative headlines regarding its own economic challenges, continues to be the anchor of global oil demand and the largest oil importer. And that's not dropping off any cliff.
No, the reality is, I think China clearly has revenue issues in the sense of, if you cut all sales to the US, you are going to reduce your revenue. But they have a very large and growing energy demand. A lot of that energy demand has moved to electricity with electric vehicles, etc. But energy is at the root of the growth of the Chinese economy. And they have historically managed those supplies very much at the government level. So you kind of interface with companies, but the government is really managing the supply demand. And I think you will see that continue to move forward. And I would expect them to have looked at what their reserves were and says, okay, so what flexibility does that give us in terms of living with and continuing to do what we need to do every day, and not being too worried about what's going on in the external world and our relationships directly with the US. But inevitably, if the situation between China and the US goes on for a long period of time, two things will happen. Revenue drops significantly, and ultimately you can't keep importing because your demand for electricity and therefore your demand for fuel has to come down. So, but it's a long-term issue rather than a short-term issue, is my view.
Let's go to the survey question, which is looking at the issue in Spain. Does the Spain power outage present a cuckoo in the coal mine warning for the global infrastructure vulnerability in the era of AI? This is not a minor event, one would have to say. We had the Heathrow Airport knocked out recently for a slightly different reason, but lack of power due to a fire at a power plant. But ultimately, we had just this week, actually, which is quite a interesting story that probably didn't get too much coverage, but JP Morgan, the issued a letter of warning software industry on supply chain security. The chief of the infrastructure security of JP Morgan was basically wrote a letter to the software industry, just sort of warning them against rushing to deploy software and AI advancements at a compromise of cybersecurity, and that a devastating act would unfold from that. And 2 days, this letter was written at the end of last week, I think it was published, and a few days later, this event happened. Your thoughts on that, Anne-Sophie? The vulnerabilities within the context. Is the European system more antiquated than others? Is there any quick fixes here if one takes it that this is a network that is vulnerable to cyber, to age? Where are the vulnerabilities? Are there quick fixes? Your thoughts?
Thank you very much. I think, the beauty of the European network is that it's very well integrated and incorporated, unlike the US, for example. You remember what happened in 2021 with the Texas freeze. So, I think right now everybody is looking at Spain and saying, oh my God, renewable, etc. This is terrible, and trying to find a correlation between the JP Morgan letter and what happened. I mean, I think this is a coincidence. So remain calm. People are working on that. What is sure is that, in the next few years and in the decades to come, further integration and more building of network is going to be absolutely necessary. And this is not going to be only necessary in Europe. This is going to
Does
be
Europe have the money? I mean,
everywhere.
We saw Europe put forward their version of the Inflation Reduction Act that during the height of the energy crisis 2 years ago, and yet has been very slow to deploy that the kind of energy security resilience, which of course includes infrastructure and capacity of storage and all these things. Europe has kind of paused on that, delayed, went a bit slow. Your thoughts on that? I mean, the shock of 2 or 3 years ago was enough, you would think, to put everything into overdrive. And now this, how is Europe performing in its reaction to such devastating disruptions?
I think everybody who is involved in networks know very well that it takes time to build a network, especially the electricity networks. I mean, I think what Europe understood is that we need to move faster, but, the thing is that it takes a lot of time. I mean, please remember the number of floating storage regasification units that we have installed also in a record time. So it's very easy right now, from everywhere
Which
else
apparently
in the
are
world
being
to shoot at Europe and
Yeah,
say,
well,
"Oh, yeah, that's bad."
No, I
mean,
want to shoot at whoever did that. I mean, where this to me it's too coincidental. Whenever there's so many coincidences, everything. I mean, it's the cynic, a journalist in me, maybe perhaps, but this just seems to be far too coincidental, given everything of the context, whether it be the geopolitics of trying to do a deal with, a negotiation with Russia and Ukraine and everything else. But nonetheless, Mark, the situation in Asia, you're obviously sitting out there in Singapore. We talked about the US exports of LNG or the lack thereof into China. But the other part of the kind of US trade tariff moment that we're in, this kind of big pause between on the reciprocal tariffs, and many countries, Europe ahead of the queue, is saying, "Oh, we'll make up the gap, Mr. Trump, by buying more of your gas and energy." But Asia doesn't have a need for more of their gas or energy. Where would they put it? What would they do with it? How do you see that sort of Japan at the front of that sort of thought, being able to sort of ease Mr. Trump's wrath by buying more gas, LNG, when they don't have any need for it?
Well, you're right in the next few years, Sean, because of course there is this big wall of LNG supply hitting the market. But if you look longer term and you look at the legacy LNG suppliers that Japan has traditionally relied upon, both Japan, Korea, and Taiwan, i.e., Australia, Indonesia, Malaysia, Brunei as well, they all pretty much face declining uh, market share due to limited gas reserves there. So the Asian buyers have been particularly proactive in signing deals for US LNG, but a lot of it is pre-FID deals, so that it would only come on stream 2030 plus. And the biggest example of that was CPC a couple of months ago in March, agreeing to buy volumes from the Alaska LNG project and also take an equity stake in the development as well. But also Tokyo Gas and Shizuoka Gas bought stakes in the shale plays in Texas as well. So plenty of investment has already
And they could
been
go
announced.
into Alaska, like you say. I mean, is that the kind of thing they would be willing to do, spend that kind of money, even though the demand requirement is not so obvious?
Well, they're looking at it very closely because, as I say, post 2030, yeah, the demand is still there. Japanese LNG imports are actually growing again this year, and they may actually overtake China
Oh.
as the world's largest LNG buyer again this year, partly due to a slower than expected rollout of renewables, but also, as you touched on, the growing gas demand from the data centers as well.
And maybe China not growing as much as maybe previously had been anticipated.
This year down by about 20% in terms of imports.
They love their coal. Andy, last word with you there. We haven't mentioned, I think, in 29 minutes, the word OPEC plus. I think I'd go into having withdrawal syndromes if we came off the podcast and I didn't say OPEC at least 5 times. So there's 2 so far. And here's a third. You're saying there's no North Star for this oil market at the moment. How does OPEC Plus go forward without any North Star? They are increasing supply. They're creating their own North Star, maybe.
So I think you just need to go back to what the root of their purpose is. It's about stability in the oil markets, in the energy markets, right? So all their concerns are global demand for oil, right? And all of this stuff going on, you could argue, is just noise. And there is really no value in OPEC reacting to noise, because noise goes up, it goes down, it goes left, it goes right. So they're going to be very much focused on the fundamentals, what is actually changing. And what you could argue is if you ignore the potential for Chinese economy to start drifting downwards because of a long drawn out battle between them and the US for trade, if you ignore that, then all of it is going on is making the supply chains a little bit less efficient, because stuff is being moved where the economic value is not, because somebody wants to please somebody else. And actually that's supporting the oil market. So I don't think you'll see OPEC making very big changes to their strategy, because until they see the market moving in a direction with some conviction, then it would be wrong for them to react. So that's what I think OPEC will do. Now you've got at least 6 mentions of OPEC.
There we go. And we'll throw a plus or 2 in as well. So here we have the cuckoo in the coal mine. Yes, overwhelmingly. China's proving that as well at the moment, doing nothing. And yet the US seems to be continuing to come for them. So it'll be interesting to see what signals the Japans of this world and everybody else takes from the Trump assault, because it's really the reaction to the Trump punch that will define a lot of the next generation, next destination, the next the punch back will give the North Star, and we're seeing that slowly emerge, both from marginal, remote places like a meeting or a town hall of a random senator in the middle of Oklahoma to Japan saying, "Well, what exactly do you want?" Mr. Trump, just tell us a little bit in 5 clear points that we can put together an offer for you, but the clarity. So these are some of the things. The punch back is really where it's at. All the best. Thank you very much, Anne-Sophie. Thank you. We'll see what happens in France today. Mark Howson in Asia and Andrew Lavin here in Dubai. Thank you, guys. See you all soon again.
Thanks, Sean.
Bye-bye.
Thank you all.
Sean.